right now, and I know a lot of people are going to be stoked that you're here. Let me go ahead.
Oh, so
I'm very,
nice.
I know they've really missed you. Like I've just been like doing these shows really late. Anyways, welcome back to Markets with May. Today we're going to be talking about BABA. I have one of my favorite guests on the show, which is also your favorite guest because you guys keep asking about David. He's doing fine. We're just all in the middle of taxes right now.
Thank you.
But I'm going to go through BABA. Some of the folks I just posted on Twitter, so people will probably be rolling in as we go. So let's get into it. Um, Past performance is not indicative of future returns. I definitely have positions on BABA, mostly long and mostly kind of long dated options because the activities have been so bizarre. And I will go ahead and admit that I've been slightly wrong on timing on this one, if not quite wrong. So that just happens. I way underestimated the geopolitical turmoil, and some of the other just random stuff that's been happening in the markets. I really did not foresee the fall of Silicon Valley Bank. So it's been a really awkward time in the markets. Tonight, they're going to call and explain the press release that they posted this morning, as well as these random kind of notes that are coming off the Chinese press release. I even had my friend read the Chinese press release because I was a little bit worried I was going to say it wrong. But let's get into both the story. I'll give you just ever so slight little bit of background, and also kind of I'm just going to recap some of the stuff that was from the fourth quarter so you can kind of like have it fresh in your head. I will say that the call is always done both in English and in Chinese for the earnings call. We'll see if that's also the case this evening. Most likely, yes. And also, I'm going to give just a little bit of like dialing it background for folks that are kind of new to BABA, trying to figure out if they want to start doing their research now for the post split of the companies that are coming out. So, all right, let me share my screen. There's almost no way to talk about BABA without at least addressing the issues that Jack Ma experienced. I got to try to keep this. You guys know I always have to stay very PC when we're talking about China. Okay, so like there's almost no way to talk about this without talking about Jack Ma's, let's call it, departure from Alibaba. And in a lot of ways, one of the things that I think may differentiate the way that I'm going to talk about it very directly than others is that I do think that this split up is an elegant solution. I want to show you guys a couple of things related to that, namely, one of the big, they're really out. Okay, so 2020, they put in a new management team. 21, 22, we see in 21 kind of this happens at year end of 2020. Okay, 21, they put in a new management team. 22, you actually start to see the breakout of these 6 divisions. I'll show you very clearly that if you were looking at the earnings report in 2020, you would not have seen these. And in some cases, it's because Sinal was just too small, the logistics component. But that kind of is what it is. But the reason it's very elegant is, number one, it's not pleasant to have to do this situation more than once. And Jack Ma was very beloved, and it's just like the way of the culture is to kind of do things more behind closed doors. This was so public that there's an elegant solution to breaking up these big companies. And that I'm saying because, quite frankly, we've got a lot of big publicly traded Chinese companies that people look at. And so the outstanding question that I think anyone ought to have and then monitor for is, will other Chinese companies also be breaking themselves up a little bit? It's a little bit harder with some of the others, and I don't cover them as thoroughly. This one I started looking at and monitoring just because of the relationship with Berkshire Hathaway, which I'm a big Berkshire fan. So, my earring fell out. That happens, ladies and gentlemen. Okay, I'm just going to take them both out. Sorry, but so there is an elegance to this, and also an outstanding question that I have that I will be monitoring throughout 2023. Is this more to come? Okay, the second part that makes it quite elegant as a solution is that there are pieces of BABA that legitimately should be separated if the goal is for them to thrive and grow. We will go through that. Okay. So then the next slide I have is the different pieces of what they call the Alibaba ecosystem. And this showed up in the website circa 2022 when they did the reorg. Actually, let me go ahead and show you what the financials look like in 2020 so you guys know I'm not full of it. And I should have put 2021 on here too, but in truth, this breakup is what you would have saw if you looked pre-COVID at what was up. This would have been year end March 31st, 2020. So notes high now. If you go into 2021, sorry that I pulled so far back, but you'll see something very similar. It's really not until 2022 that you'll see the 6 company breakout. So there's also you don't see international split from domestic. And that's kind of really important because you can kind of see the strategy as to what makes this breakup fascinating, intriguing, even from a business standpoint, to the extent that some of you guys compete with Alibaba in the marketplace or otherwise might want to just know how to think about it in relationship to the work that you're doing outside of stocks, et cetera. Okay, so now let's look at the 6 different pieces. The Chinese commerce piece, I believe, is not going to be, they're not going to do much more with that as relates to funding, et cetera. It looked like to me from the Chinese press release. And I think we'll get greater clarity on whether it's all 6 pieces or if it's just the other pieces, not Taobao, Tmall, et cetera. But this is the Chinese commerce piece that people know and love. This is the international commerce piece that's going to be broken out. And I think that is a genius move in some ways because, quite frankly, given the geopolitical state of affairs, it probably is the right call to separate out that business if it has hopes of becoming a bigger company. So AliExpress in the West, that's what you would know. Lazada, very big in Southeast Asia. I have used it before in Vietnam and in the Philippines. So Lazada looks a lot more and feels a lot more like a better interface. AliExpress is a fraction of that in contrast. Long story on that, okay? And then so on and so forth. I don't actually have personal experience with the other 2 international commerce sites, but that is separating out. I'll show you what that showed in the fourth quarter or the 9 months ending. Just, okay, local customer services. These services are primarily, they would be kind of, you would compare them to things like Uber Eats, stuff like that. They are not really, in fairness, if you knew these companies, if we literally translated every one of these companies to American companies, you'd be like, oh yeah, that doesn't have anything to do with the core retail business. That looks nothing like Amazon. That's fine. Digital media entertainment. Let me just tell you all this. Youku is actually their comparable Facebook. And you'll see in the numbers, it's not really that valuable because Douyin and everything else has just taken so much market share. So they're spinning out their Facebook along with the piece of so Alibaba has like a movie business as well that's very popular. So the movie business plus Facebook, the media business is this digital media entertainment piece, along with a couple of different other things that are very clearly media related. And then innovation and initiatives is doing its own thing. Logistics, Cainiao, you guys know every single time I do a call on Alibaba, I'm stoked about Cainiao and what that business actually is. It is essentially the infrastructure that they grew to take care of a lot of things, last mile, of course, and what we think of with Amazon, but really it incorporates as well that airport in Hong Kong that allows them to get to 50% of the world's population in 5 hours is what the mandate was at the time when I was at the Chinese Chamber of Commerce or Hong Kong Chamber of Commerce, and they were pitching here in the United States to try to get small businesses to go over and startups to go over to Hong Kong. So Cainiao is, even though it's very small on revenue and it's very new as a business, is fascinating, and it's still not quite profitable, but I'll show that all to you in a second. So Cainiao, very interesting. And then the cloud business, let's just call it what it is. After that TikTok trial, the cloud business needs to be separated from Alibaba. I mean, that one, I won't go into add too much, we can go into that in a discussion session if it's interesting, but the cloud business cannot be with all the other businesses and anyone expect those businesses to receive funding at this point. So that's kind of interesting. And that includes DingTalk, which is more kind of like their WhatsApp sort of thing. But WhatsApp is, I mean, look, I'm just trying to come up with companies so that you can understand what these things are. And then the actual cloud business, which can be compared to anyone else. Now, I want to show you the financials, and I tried to just write at the top. They report the separated. They report the separated earnings. This is just on the quarter, okay? They report the separated businesses in renminbi. So you have to divide these numbers by 7. Which, I mean, if it's been a long day for you, I get it. The math is painful, so I'll do the best I can. But the commerce business was in 2021 split back into Chinese commerce and international commerce. Before that, it was just commerce. So that's why I'm saying it the way I'm saying it. This isn't like all of a sudden out of the blue, because that was that. Okay. Before 2021, one business. Suddenly, after a year of the new management, we're starting to split out into 6 parts. Okay. So just realize this has been in the making. All right. So the international business split out, currently not profitable. But I want you to really monitor this part, which is share-based compensation expense, because during this split out, you do have a lot of new executives coming in, and you want to pay them just so going into a massive COVID shutdown scenario in China. So if you remove the share-based compensation, which I think is fair and square, because now they're going to be, once these things get up and running, they're going to be assessed on the ability to grow the companies as standalone, getting proper funding for just that avenue, et cetera, et cetera. So I actually am okay with using EBITDA instead of using the net income number, only for the purposes of thinking about what might be the sum of parts. Okay, fair and square, you got to use net income. Okay, so that is what it is there. So I just want to note that the international commerce business is still somewhat negative, and you would not have really had a comp to previous years. But we do know that in the last year, it's been a little bit of an awkward period, let's call it, in the world as relates to imports and exports from international. And so while it is absolutely the case that Lazada and some of the others are 100%, very much so, the commerce that you know and love, the wholesale business is also in this piece, the part that ships international. So just realize that I don't know how to give you a great sense for valuation, but that's there. The China commerce business was profitable throughout last year, and that's despite some crazy stressful economic conditions that they had. It managed to eke out a 1% year over year change growth, which I give them full props for, given how much they shut it down. And so that kind of is what it is. Local consumer, you can kind of see that apparently they are going to get funding for, and we'll see how that goes, because, you know, if you think about it, some of where the craziness started with the Chinese stocks and the VIE structure started with these kinds of service app companies getting clobbered and dragged back into China. So we'll see how the local consumer services business, but this is really like an Uber Eats. But in fairness, that has location tracking too. So we'll see. Anyways, right with that one. And then Cainiao is the logistics. That one is, just for comparison, at 16 billion on the quarter. And then you've got over here on the 9 months, if I do the same thing, you've got 42 billion. So call that business approximately for 9 months, call it about 60 billion renminbi. We're still talking like a very small, so 60 divided by 7 is 8 and change. Let's call it 9 billion, okay? That is significantly smaller than FedEx and UPS. But I'm telling you, the infrastructure that was built for that is crazy significant. And as long as that thing stays attached to China in the wrong way, not interesting. But spun out, it becomes this amazing delivery mechanism for those that might want to sell into China. So we watch, that's the part that I think every single call since they've broken out Cainiao, an investor has, to the extent that they can get one through the gates, asked, hey, you spinning out Cainiao? The answer now is yes. Okay, it's happening. And I think that's where people will be excited. But again, it's a smaller piece. The cloud business, a lot of people are very excited. And I think that's fair, because essentially, even though they'll never be like the cloud companies that grow internationally all over the place, but it's not a small population in China. And you know the Chinese are going to make you use a Chinese cloud system, because Google's not allowed in there. You know what I mean? And neither is like Amazon. Well, I have to double check. I'm not 100% sure if Amazon is completely booted out of there or not. Maybe someone knows and they can stick it in the chat. But yeah, so that kind of is what it is. But, you know, and then that, I think that there are many companies in Asia that don't have qualms on which server they're on. So it kind of depends a little bit how you're thinking about that cloud business. To be fair, I don't do a tremendous amount in Asia. So there may be other people. Stick it in the chats if you just know better. That's super cool. And then, like I said, the digital media business and the film business, they're going to have to, that's the turnaround. Okay. They're going to have to right size and figure out how to add whatever remaining residual value exists in some of those pieces. You can kind of see what's going on from an earnings perspective, from a loss perspective, quite frankly. And it has the same issues that um, that Facebook has as relates to business model. And unfortunately, they're also competing with really strong competitors in China. So that kind of is what it is. And so that's the quick and dirty on just showing you the 3 month. I mean, I could show you the 9 month, and I thought about doing the math, but the fact is, the 9 months really is like the ramp up from the 3 month is actually, and what's been going on in China makes all of this kind of like moot, because what earnings are going to happen in 2023 has way more to do with the geopolitics happening right this minute. And then how do you think about the longevity of that geopolitics? Is it 1 year and we work it out? Is it 2 years into our elections and we work it out? Like, how long does it take to work it out? And that's going to really govern the valuation. Now, the only other things that I might mention that might be worth talking about a little bit is that as relates to the cloud business, I've heard some guys on, at different houses think that just that by itself is worth 200 in market cap. And I'm just like, okay, wow. But honestly, these types of breakup valuations where the company's not necessarily making money, I don't know how to think about it, only because like it's still a Chinese cloud business. Not every, like, you're not going to have certain things that you could do with that business relative to things that you could do with the US business and or any other country, just because of the geopolitics. And with that, David, what are you hearing? Because you work with a lot of the traders as well as investors.
Well, on Baba?
Well, on everything. So I don't know, are they even talking about Baba today, or is everybody kind of like,
Well, yeah, I mean, we're kind of at a crossroads because the SPY is right against resistance, and the Qs, meaning the Nasdaq, is broken out above resistance. So Baba looks strong. I mean, do you think the
yeah.
CCP had anything to do with its breakup?
100%. I mean,
Okay.
like, I think that this has been in the works. I think as soon as 2020 happened and management went in there and did an assessment on how to cut it up, that this has been in the works since 2022 when they first separated the 6 companies into different reporting groups. Because before that, that's not how they reported the earnings for this company at all.
Okay. Might they do the same thing with TikTok?
That's exactly what I think everybody's looking for. So the timing, they may have lingered a little bit longer, quite frankly, but you're right. It's possible that the timing is going to just like, one after the other. So if I had to like just shoot from the hip on this one, you guys, and I really don't know, and I think everybody will be listening tonight's call to see what the timing might be. I would think that they would do this and then slowly try to see what happens as far as market response, as well as what happens in the financial community itself, as well as in the buyer community for each one of these pieces. And then you once they have a better sense for the market reaction, I think then you might see more of these, and then quite an escalation, because the Chinese, when they do stuff that they know is a little bit funky, especially as relates to financing of companies, it usually starts out very slow and then it accelerates really fast. So even if you could care to nothing about Baba, it'll still be interesting to watch the story and then see what it might imply from a macroeconomic perspective.
Okay, so the Baba part, what part of that business are you focusing on? The
Okay,
delivery Amazon type, or
so I think, okay, so first and foremost, I do want to understand the exact nature of how, because what was announced was that they are like allowing them to go and raise capital in the markets. The nature of how that would be done exactly, I'm intrigued. Um, like I said, there's pieces of this where it's not going to go public for sure, and we kind of have to monitor what the deal is. So, like for example, the cloud business going public is awkward to me in some ways, given what the nature of that is. That's data, and all this has been about data. So, like, I would be really intrigued to see how that plays out, quite frankly, right? And then also the what they're calling consumer services business, because so much of that also has tracking data, like locational based data, and you enjoyed Didi in one way or the other last year, like 2 years ago. The whole point with Didi was because of that tracking data. So I'm intrigued by what happens to that piece, what precisely happens to that piece as well. Let me say it that way. And then China, I think, is a little bit less controversial. So it'll be interesting. I do think it's the right call for them to spin that out and let it get its own funding and do its own thing, because I don't think that that necessarily should bother anyone as far as that goes. And then the international commerce business probably absolutely needs to be spun out if it ever has a hope of becoming a bigger piece of the business. So that's what I'm looking for. And then aside from that's Baba specific, and then I'm looking for anything I can get for like color on how all of this that's going on in the US is being perceived by at the company macro level. You know, I can always just call up my mom and ask her what the Chinese television is. Like, I mean, you know, all these Chinese channels do still come to the US, so we can listen to them just like anyone else can listen to them as long as you have someone to translate for you. You know, and then I do have some friends that have VPN to China to tell me how things are going there too. But so I don't need that, but getting a little bit of more insight into how Chinese companies are viewing things is incredibly interesting. But they're so tight-lipped, and usually the translator is very moderated. It's a fun call to
Yeah.
listen to. I'm not gonna lie.
I mean, Baba looks. I mean, it's very exciting. I mean, I would buy pullbacks. I mean, it's got a
Yeah,
lot. I think
yeah,
China in general, we're very impressed because it's such an efficient way of doing business. In other words, there's not permits, there's not political things you have to go through. It gets done, and yeah, we're excited about China.
yeah. I mean, geopolitical risk is real, so I think that anyone taking a position has to size with an understanding that this thing is not perfect. Okay, like even if you did the valuation work and came to the same conclusions that I have and David has, like because of the geopolitical risk, think about your sizing very carefully because, like Didi, you know what I mean?
Right.
It can be rough, and then know that you may from time to time have to hedge that position because I'm a realist. Hey, you know what I'm saying? All right. Oh, wait, I didn't even look at the chat. I'm so sorry, you guys. Thank you so much, Ham. Ham doesn't care about China. I get it. That's cool. Yeah, there are things like this happen, and it's like it's incense. Thank you, Hadouken, for coming up and like as always, like putting up such great stuff. Dave Rowan, shout out. Let me see. No Kane, shout out. I think it's a really quiet day today. Israel, shout out. I okay, good question. I listen to them in English because I don't want to mistranslate. And then if I think that the English is wrong from what I hear, I'll just call up my Chinese friends and double check is what happens because I don't want to bother people. Um, uh, Ba Donkey Kong, thank you for watching. And Nikki, you know what? I'm not in Meta anymore right now because I think my issue with Meta is because they're rallying off of TikTok, and as long as that continues to persist and we don't have any kind of intelligence on that, then it's really a next quarter thing. I actually do think that YouTube is the net beneficiary of all this, not necessarily TikTok, and it has to do with monetization. TikTok was great at helping content providers monetize. YouTube is great at helping content providers monetize. Instagram is kind of all over the map, and Facebook is worthless for most people as relates to monetization. I could be wrong. If you are a Facebook content creator and find that to be your best avenue, feel free to stick it in the comments and awesome. Teach me, quite frankly. But YouTube to me and TikTok, in my experience, is better at monetizing, and I think others share that experience with me. So because of that, I think they continue to lose share, which is what's been happening for the last 3 years, essentially. Okay, anything else? Okay, we've got some people. I know, Ham. Sadly, I'm sorry, kids, but you are gonna have to find something else to do because I can't. I mean, the one thing that was clear from those is that Oracle didn't pay Congress enough, and TikTok has a thing where they just don't take political ads at all, which was stated in there. So unfortunately, yeah.
Let's see a
Well,
question on Tesla. Tesla needs to start closing above 200 to
yeah.
be long.
And I worry about Tesla because as much as they are the most insulated from any kind of difficulty in the credit markets, they have more cash than other car companies do in this. Well, I mean, okay, look, I'm talking about large cap car companies. There are some smaller manufacturers that just cash rich, but like Tesla has more cash than the other big car auto companies, let's call it like that. And they don't do financing in any kind of meaningful way. That's all off. Like, you got to bring your financing or alternatively work it out mostly with Bank of America. But nonetheless, most people do still get financing terms on their car, or leasing is also a finance term. And if the market continues to seize up like this, it just makes everything more expensive if,
Yeah,
for
that
anyone that's trying to buy with debt.
this last quarter will reflect their price cuts.
That's a good point too. Like the quarter itself has that, and so if they didn't get volume because people were a little scared with this banking stuff going on, that's a thing. Um, okay, I don't know what you mean by that, Ham. So, but acknowledge you on Oracle and Microsoft. Are we past the? Okay, I think in order to get back, I know a lot of people feel very passionately about this. So this is just May's personal opinion. My personal opinion is you have to get through the fourth. You have to get through this first quarter because this is what I'm afraid to go. I have very small bullish. I have very small exposure in a couple of banks, and I've got strangles on FRC to be fair, and I'm actually calls against, like I'm doing pairs trading on some of the banks where the long that I'm using is UBS, because I think the Swiss bank has planted its flag and it's going to protect the hell out of that bank one way or the other. Watch my language. But the reason I think you have to get through the first quarter is I think you have to have the banks come out and tell you their positioning and whatever it is that they feel like disclosing as relates to their liquidity position. You have to let the market react to that. And then if it's reacts okay and you don't still have this weirdness in the marketplace, then maybe we get to take a big breather. Because here's the thing, right this minute, if you were trying to get liquidity and you went to either the debt or the equity markets, you're going to go to zero very fast. That's what Silicon Valley Bank proved by going to the capital markets to try to raise capital. Their CET at the time was 13.5%, according to the deck. And they went to zero within a week. So, like, I think anyone else has got to be watching that pretty closely. Um, yeah. And that's what we've got. Um, Definitely thank you for coming. And I'm going to close it out there. Is there anything? Oh, you guys, Grula, shout out to Grula. And you guys can check out that website as well. David always forgets to put it in his tagline, but we should make sure that's there next time. And that's it. Bye guys. Good luck.